Okay, I'm back. Everybody's still alive? Okay, perfect. Okay, I will just we'll use another example just to make sure we really understand everything, and then we go immediately to part 3, bounce trading on EMA 206.33. It's already a long time. We are here already, what, almost 3 hours or more with the breaks, of course. So let's not push it. You need to digest all that. Let's start with the weekly chart on this example, New Zealand dollar, US dollar. I think it's easy to spot. What do you see? Let me zoom in. Price is moving up. Yes, it's an uptrend, but also ranging here a little bit. Okay, so we have a lot of support and resistance. If I draw my support line, this is the price here, and the next, or the resistance, horizontal resistance line close to the price would be where? Somewhere here, correct? Look at this, all this here. And what about support? If I start down here, if I check all these areas, of course we have support there, but closer to the price, look at this here, the price is pointing out in combination with these resistance levels, and here I can go up a little bit more. Now we have a lot of touches coming from here, 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 there, and here. So I think that is the most important area of support. Do you agree with the chart and the support lines closer to the price, support and resistance? Okay, great. You see, yeah, somebody said it already, price action is most important. All the indicators we use are helping a little bit to decide. Actually, what we use is only the EMA with 4 different settings. That's only one indicator, and it's already enough for me, at least. And every time you add something to the chart, every time you add an indicator, you will find an excuse probably not to trade, or it could be also be a little bit distracting, because maybe one indicator is telling you that you should buy while the other is telling you that you should sell, and then it's not that easy to take decisions, right? So the less you have on your chart, the better. The trend lines you draw are very, very powerful, and you don't really need too many lines and indicators and colors on the chart. It's overwhelming. It's not helping. It's actually bothering most traders from doing something right. Okay, so yeah, again, let's focus on bounce trading. Too much philosophy for today is not good. And of course, you also have a powerful uptrend line. If you just look at the 200 EMA and all the touches down here, if you draw a line from here, you'll see you have a very, very powerful support line, yeah, with more than 3 touches. Okay, but you don't need more than this on this chart. You don't even need that line right now, because the price is up there. Everything else is not helpful. Okay, that is resistance. You see all the touches here and there and there. Then a false break, and the price is moving lower in the end. We have support coming from back here, and touches there, 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 and of course here, and the price is just in between all that. On the weekly chart, it doesn't help right now, right? Right now it's not helping us. We don't see anything. There are no setups. The price is not close to major resistance or support. But there's one thing, the most important part of that here is that the price is more or less in the middle, squeezed between resistance and support. And that is telling us in terms of bigger swing trades, we just have to wait, right? This is telling us that that's not the time right now, especially on this time frame, to look for any bigger trades, because the price is just not close to major support or resistance, horizontal support and resistance. Whatever we do, we have to do on what? What do you think? If we still want to look for something here, what do we have to do? We have to move to, yes, there we go. Slowly the answers are coming in. Move to lower time frames, right? The next time frame would be, the next lower time frame would be the daily chart. And what we see on the daily chart is here, easy to spot, previous powerful support, also a range in this daily chart, right? Again, green candles after the bounces, or red candles after the bounces, powerful short and long trends, easy trades, sorry, not trends, trades, easy trades, good targets. And then the price broke resistance, moved higher, created a new high, and it retraced. But after the retracement back to the 12, it did not change the direction, it did not move lower. It actually stuck between these levels here. What is it? 0.82 something and 83.50. And that is a range of about 120-30 pips on the lower time frame. It's visible here also on the daily. Why? Because we don't have higher highs and higher lows, or lower lows and lower highs. We just have one retracement on this daily chart, and then a lot of spikes, different colors, one green, a red, green, red. It's not a nice up move where you see just clean big green candles and nice retracement candles. What you see here is a little bit red, a little bit green, and the price not going anywhere really. Does everybody agree so far? Okay, great. So what do we do? What is the next thing? We know the price between support and resistance coming from weekly charts and daily charts. But now we have to switch to the lower time frame. That's the 4-hourly chart, right? And on the 4-hourly chart, we can start drawing new support and resistance areas. At that point, the price came down. It did create a lower high here, but it did not create a lower low. It did only move a little bit, moved up, retraced back to this previous level of support, broke it a little bit, but then spiked up. And that is the first sign of a bigger range, because we don't have a lower point, a lower low and a lower high. We have a higher point, but then the price did not stop here. It moved lower. Okay, now we have previous support, previous resistance. Here support acting now as resistance. Price comes up, moves back down. That's it. A range is more or less confirmed. Then the price moves up and it's hitting this area only. Okay, now do you all identify the range? Can you all see this clearly? Perfect. And now we have a live example of something that might change. The price at this area did not reach the lowest point. It kind of created a higher low. If you just ignore the spikes and draw the line like this, you'll see it's a little bit higher. It's still a range, but it is a little bit higher here. It hit resistance, bounced there, 50 points, which is not a lot, and then it actually moved higher and right now it's trying to break resistance. The price already moved over this level, but it's not confirmed. And what I mean by that is the price could still create a red candle and move down back in this ranging area, right? If that happens, it would not confirm a continuation of an uptrend. The price actually needs to stay over here and more or less use this resistance now as support. Only then it would confirm that the price is not moving in a range anymore. Do you all understand this? And that's when you have a confirmation of an end of a range. If the price comes out of the range, stays above previous resistance, now acting as support, and then move up. Okay, the same if the price does this. In case it moves lower, and then support is acting as resistance. I just want to make sure you identify the range again. Now, the difference between this range and the other ranges is that we don't have a clean, let's say, resistance area where we can draw actually a good line. Here we have the most touches down here. Here are the spikes. So actually the range is somewhere here. Okay. And because here are the most touches, even if it looks different on the higher time frame. So to make sure the price stays, stays there, we need this setup. If you say, okay, look, touch here, a touch there, two touches here also, so we have a range. Let's try the long. Yes. Is it worth it? It's about 80-90 pips. On this 4-hourly chart, this is 60 pips. Is this covering the first and second lot? No. So would it be, let's say, conservative bounce trade in a range? Okay. Now we get a red candle here with a stop over here. That would be like what, 70 pips? The target is 60. Is it a good target? It's not. Okay, and again the same, even if the price is 20-25 pips over the highest point, even if you don't get stopped out, it's still not a good target. Here you have a stop of about 60, target again 80. It's not covering the first and second part. So actually you don't have big enough targets to take the trade off this 4-hourly chart. Only if you're aggressive you could do this. If you're aggressive trade and you say, I don't care, I put my stop below here, I just target 80 pips and that's it. That's one way to do it, but you need a little bit of experience. You don't split anything, you just have a stop of 60, 70, you target the previous highs, you take out everything there, and that's about it. Okay, of course you can do that, but really try to be more conservative, especially if you start this. Okay, here again the same situation. Down here, look at this, you get the first green candle. Now you have a stop of about 80 pips. The target would be 40. Even if you aim for the spikes at 60, it's not covering the first and second part. So what you have to do is you can try on the lower time frame to look for your lower highs, 1, 2, 3s, 2 to 3 line breaks to take the short, or you wait for the price to come out of the range and look for setups there. I just wanted to cover this example. This is an example of a small range where it's not easy to find entries according to the rules. So in this case, what do? If you have an entry, you identify the range, but the targets are not big enough, what do? Please, can I have 150 answers? Ideally. Yeah, stay out, stand aside, lower time frames. Yeah, I'm just talking about, yeah, exactly. Yeah, if you go to the lower time frames and you find something great, if not, you just look, like Greg said, look for a different trade on another pair. That's it. But on this pair, you just stay out. Okay, perfect. Great. Now we can start with part 3, actually bounce trading on the EMA 200 and 633. I know it's a long night, it's already 12 o'clock, but the entries, as I explained before, nothing is changing in bounce trading, the same entry rules, exit rules as I explained in the previous part. Okay, let's start now with the 200 and the 600 EMA. I make it short because I know it's too much information for one day already, but I'll try really to get to the point immediately. Okay, remember the ebooks also, nothing changes here. I will use one good example, and that's the gold chart. Sorry for that, I just need to see how much I can get on my screen here. Okay, so as you can see on this gold chart, the price is trying to move up. It's kind of creating lower highs, lower lows. It's bouncing also on the 200, on the 36, and we have a small trend here in 2001 to the downside. In the end, what happens, the price breaks all EMAs we have here. It's creating higher highs, higher lows. We have a lot of support, a lot of touches there. Look at this, higher highs, higher lows. The price moves up and then it stays over the 633 here, the yellow line, creates a higher point, it retraces back to the 36 EMA, and bouncing on the 36 EMA, moving up again, retracing back. So it's creating higher highs and higher lows all the time. And so is that a range what you see here, or is it a very, very big, powerful uptrend on the weekly chart? Yeah, of course it's a trend. And again, to identify it, you just need to look for the higher highs on the chart and the higher lows for an uptrend, and the opposite, of course, for the short trend. It's going up and up for years. It's going up, okay? And then suddenly, after what, 8 years, the price created a lower high. It's nothing unusual. It did the same here, but then it actually broke the 36 EMA and created a new lower high. Now you have 3 touches actually, okay, and then the price moved down and hit the 200 EMA. Okay, the 200 EMA in combination, of course, like always, you know how to do that. We have also in this area where the 200 EMA is a lot of previous resistance. Okay, support here, but resistance. The price is bouncing there, it moves up, and then suddenly it comes back after really a long time, 8 years, and retraced over 3,500 points. And what happened when the price touched the 200 EMA here for the first time? It actually really touched it by the pip. What happened? It bounced. Okay, so we have horizontal resistance now acting as support, and then the price hit this area and bounced, and it created a new high. It hit this previous resistance line, and you see again how powerful the lines are. Price retraced 800 points, and then in the end it moved up, created a higher high. This high is higher than this and this. Yeah, it's also this low here is lower than that, so we have a higher low, and it just continued to move up and up and up and up. Okay, so far. So what we saw here was the price touching the 200 EMA on this high time frame and bounced on it. And in this case, because it was an uptrend, the price moved on, continued the trend up and up and up for many, many years. So afterwards, it created lower highs here, but no lower lows. And again, if I draw my horizontal support line here, previous resistance, what do we have? We have a lot of touches there. And after the previous retracement, the price retraced back up to here. Now we also had support. We had a false break. The price retraced back. And if you extend the line, what happened? The price bounced, ranged a major support a lot, moved back up, hit the resistance line, and in the end crashed. I don't know how many of you remember, but we actually took trades up here, short bounce trades, option trades, some of you live, and some on demo, which is okay. So we have a range, a big range, and then the price created lower lows, lower highs. It had the line again, retraced about 700 points, and then in the end broke. What happened when it touched the 200 EMA here? Did it bounce? No, nothing. It just broke. It just went through. Okay, so if it's going through, okay. It just happens, okay? But what happened afterwards? The price created a new low, and then after this big move down, it actually took a breather. It retraced. And where did it retrace to? It retraced to where? To the 200 EMA, okay? And also the 36, almost, exactly. And what happened after the price touched the 200 EMA, after it decided to change this trend for good? It bounced, and it's still moving lower, over 1,600 points right now. Okay, so usually what we say, if you want to write it down, the first touch on the 200 or the 633 after a very big move on the chart results usually in a bounce on the 200 and 633. Okay, and it doesn't matter what time frame. It usually does it on all time frames. You still have to do the top-down approach because you want to figure out in which direction you want to trade. A bounce trade is good against the main direction, no problem, but it is most powerful and really great if you do that with the main trend direction. The way you handle it is exactly the same way you handle it. You handle the bounce trades, the classic bounce trades. Okay. Now this here is an example where the price actually retraced back to the 200 on the weekly chart, and you also got a 1, 2, 3 setup. You know, the basics of the 1, 2, 3 setup I covered earlier. You need a previous high for downtrend, of course, a low, and then a lower high, ideally retracement of 50-60%. Okay, in this case we have the 200 EMA here, and we have a good retracement, and we also have a 1, 2, 3. You don't have to focus on 1, 2, 3s now. That is just an example that has everything. It has a break of the 200, it has a retracement, and the 1, 2, 3 setup, and the bounce on the 200 after this retracement. You even get your 2 to 3 line break, okay, and you even get a red big weekly candle. So the question probably is, should I trade this 1, 2, 3 on the weekly chart? So could we do that? What do you think? Yes, no? Of course we could, right? We could, because if you take it, you need a stop of 1,400 points. As long as it's 2% of your account, it doesn't matter. Look at all these other 1, 2, 3s on the weekly chart. Not bad. Even the ones that we're taking much later on. Okay, and we are not talking about 1, 2, 3s in much detail right now. It's just an example. So now you have a retracement, you have a bounce of the 200 EMA, you even have a lower high and a lower low. And why not? Yes, of course. But you don't have to, don't worry. I want to use this example because I have friends and students and members that love trading weekly and daily charts only. Why? Because you hardly get bad setups. Yeah, the higher the time frames, the better the chance that the trade works out. You don't get the false, you don't get all this noise and whipsaw's. you get usually on the lower time frames. Now on the daily chart, the next move would be, okay, I see the price hitting the 200 EMA. What should I do? Can I do something already when I see the price bouncing a little bit? Yes, of course you can. But you have to go and switch to the daily chart. And on the daily chart, what you want to wait for is what? Is the red candle, right? You need that red candle. Here's your first red candle. And also you know that you have higher highs and higher lows. You know that the price tries to move up right now. But the weekly chart is the higher time frame, and the higher time frame is the boss. So what you could do aggressively is wait for the first red candle after the bounce on the weekly chart. Put the stop over there. And then the same story. Do you have a target of, what is it? In this case, it would be like 500, 480, 500 points. Look at the weekly chart. Where is the previous low on your chart? It's this one. You don't have anything here that's bothering you in terms of support, right? So that's the lowest point. How far is that? 2,000 points. So could you just use this daily red candle on the daily chart against the main trend? But the weekly is the boss. It's the bounce. It's a short 1, 2, 3 setup. Everything is pointing down. Yes, you could, right? Stop there. Right now it's a win-win situation because both targets, target 1 and 2, are hit already. You get confirmations the price is creating lower highs on this chart. You even get new 1, 2, 3 setups. We don't, as I said, it's not that important right now. It's just a confirmation that the price moves lower. It creates lower lows and lower highs. And you have your weekly bounce on the 200 EMA already. Plus a weekly confirmation and a nice big retracement. And about Fibonacci levels, I got a question before. I saw that at some point. You don't have to, if you measure the distance from your previous high to the low, this is 4,000 points, and then you measure the distance from the low to the touch or to the retracement, and you have like more than 2,000. You know that it's more than 50%. Okay, so you don't have to draw a Fibonacci retracement. Here we go. It's almost 61.8%. You just see that by watching a little bit. Okay, you can use it if you think it's helping. You don't have to. Okay, that's one good example. Weekly bounces. Let us try to get this on the chart. So you have it, your touch here. If I can scroll back, I'll try. I think yes, it will go to this. There we go. This is the daily chart, and this is the 200 EMA. Let me get rid of all the others on the next lower time frames because you don't need them. Your 200 and 633 in this case comes from down here on the weekly chart. Now you don't want to wait for the weekly green candle, which I understand. So could you just take the first green candle on the daily chart and place the stop below here? Of course, why not, right? It's a weekly 200 EMA bounce. It's a powerful chart. Now, the thing is, you don't have more support in this area. That's the only thing you have is the 200 EMA. Okay, the only thing you have is the 200 EMA. No, the candle is closing over the body. This is the body. Yeah, the daily candle, because we got the bounce from the weekly chart. Another thing you could do is wait for the, what do we do on the bounces? Remember, the first higher low. So let the price do this, or later on another chance, or later on another chance. Make sure you place the stop below the low, and that's okay. If you miss it out, can you wait for the next one? So the next 1, 2, 3. You could, but what happens if you do this? If you don't do it with the first setup or the green candle, the confirmation is always best if you don't have anything else. This is just a 200 EMA bounce, but you don't have major horizontal support or resistance, right? So waiting for confirmation would be the best thing to do. If you miss it and you wait for the next one, that means you have an entry higher here or even here, depending on, no, I think that's still enough. It's closing higher. You then have to make sure the target is big enough. Now on the weekly chart, the target is huge, so it's not a problem. Okay, you can still put the stop below here. If this target is too small, if this target would be somewhere here or here, then it's wiser if you take the second entry to place the stop below the previous low. Okay, this 1, 2, 3, not the low here or here. Yeah, you want to place it below 0.3 and below your existing support line now, because now you have 1, 2, 3 touches as well. That would be a late entry, a late bounce trade entry, using the daily chart as a reason to trade, but actually having targets, of course, on the weekly chart. And because you have a powerful trend line on the weekly chart, if you enter here on the daily, you measure the distance. If that's 1,000 points, let me go back to the daily. I have to scroll again. So if you have a stop of about 450 or 500 points, the target now is 1,000. Can you take the second setup? It's actually also 1 to 3. Exactly, yeah, you could do that as well. Targets are there, and you see the price is bouncing on it, getting back exactly to support. You extend the line and then moving higher in the end. So another very good example with a confirmation of a higher low and a late entry after confirmed higher high and higher low. Another one, with other words. Okay, let's use another example, and then it will be enough for today, I guess. This would be GBP, the GBP US dollar cable. Let me zoom in. So what do we have here? Look at this. The price is in a very powerful downtrend. Good old times, 2008, 2009. It's breaking the 200 EMA, right? But then it's reaching the 633. It not exactly, it stops a little bit earlier even. Retraces 1,300 points, breaks it, and then it comes back after a very big move, and it's touching it almost by the pip even on the weekly chart. And what happens here? It's bouncing. Price comes back down, it's trending, it moves up again, uptrends. It's hitting the 200 and the 633. Both EMAs are more or less, they're very close to each other. Bounces there. Now I can zoom in and again it retraces, still creating higher highs, higher lows, and then it moves up to here, breaking a little bit, bouncing on the 200 EMA. It's moving down, it's retracing back up. It's touching the 200 EMA almost by the pip after 1000 points, and what happens? It's bouncing. Again, the same story, bouncing, trying to break it, it's bouncing. Right now, it broke the 200 EMA again, like it did here, a little bit more, but we start seeing the first red candles. So maybe bouncing again. Why not? It's doing it forever. The chance is there. But if you look at this chart, that's not the only thing that happens in this area. The price is bouncing on the 200. Yes, if you take now your horizontal lines, start from down here. It depends on the history you have. With this 200 633, depends a little bit on the history you have. You download an MT4. Okay, it's sometimes not at the same area, so you download history and then it usually changes. Look at this. What do we have here? Price is moving up, creating a higher low, creates a higher high, but no lower point on the chart, right? It's a bottom formation, previous resistance acting as support. And then the price moves up. Look at this. Actually up here we also have previous highs, right? Now we have a confirmation of major resistance in the 633 and the 200 EMA. Price moves down, traces back. We also have resistance in this area. Still a higher low, but no higher highs anymore at that point. Price stops at the 200 EMA. It's bouncing. It moves down and it's finding the previous support levels. So would that be a confirmed range here right now? Already from up here where the price creates a lower high on that weekly chart, of course. Yes, it is. And then you see the price stops there, previous resistance. It didn't even touch the 200, but it moves back down to support, and now we have clean support. The resistance is a little bit flexible here with the 200 EMA touches. It stops at the 200 EMA, but down here it just stops more or less at the same levels. Okay, so the price retraces, bounces again, it's reaching the 200 EMA, and now you don't only have the 200 EMA, but you have the 200 EMA in combination with previous highs. Most powerful now, because now you have not only the 200 or 633 touch, but you have the touch after a big move in a range in combination with previous highs. Most powerful. Price is reaching support, same story. Look at that, it's hitting this area, it's breaking the 200 a little bit, but reaching also previous resistance. What happens? It's bouncing. Goes down 400, almost 500 points, retraces, trying to break, but in the end bouncing on the 200 EMA and the existing resistance line. You also have a major trend line. If I start drawing a line from up here, look what happens. Many touches on the trend line, in combination with horizontal resistance and the 200 EMA. Can't get better than that, really. Something like this is just so powerful. And this works on almost every time frame, okay? We don't want to go lower than the 1 hourly chart with these things, especially when you're practicing. 633, you just make it. You just write 633 on the EMA. I know not many people are using it. I just use it because I don't know, it just works great. I always used it. Like I did so many exercises with all the EMAs, and I just came up with that one that is just working nice. Okay, so bounces there, price goes down again, and this time breaking even support. Okay, there we go. What happened? A range there, it comes back, hitting the 200 in combination with the previous highs, not by the pip but almost the whole area here. Now it looks like it wants to retrace again. We don't know if it will, but if it moves below the 200 EMA, yeah, if you're not already short using the lower time frames, of course the same story again. You go to the lower time frames, look for setups there, and target the lows of the range. In this case, you have horizontal resistance support and you have touches on the 200 EMA. Let me delete the lines. Now I'll switch to the daily chart. We can also use the examples here. I think I used that example even in this little ebook, the basics. So what do you see here? Even without doing the top-down approach, what do you see? Price comes back. It hits the 200 EMA after a bigger move, right? And now you see many candles ranging in this area. 1, 2, 3, 4, and then suddenly a red candle. If it makes sense, if you have bigger targets, what could you do? You could short it, right? You could short it just by using the first red candle. Stop over here, target the lows. It's 160 points. The lows are what, 600? Price goes only down 400 or 500. 2 lots out. It's a win-win situation. You just start managing your trade according to the rules. You start trailing it according to the rules, taking out the first and second lot, basically trailing the stop to break even, and if it doesn't make sense anymore, getting out even earlier. But remember the higher time frames first. Okay, now as I said, on the daily chart, this is one thing. The other way to do it is, if you don't like the first red candle, to take the bounce trade, switch to the 1 hourly chart and look for a lower high and lower low to give you that entry. Then the price retraces back to the 633. It's touching it. Let's see if you have horizontal support and resistance. Yes, in this area you have a little bit of trouble, and you have a move of about 700 points in only green candles. Now you get the first red. What could you do? Stop over there, targeting the low of the range or the previous lows. Is it far enough with a stop of 160, 170 pips? Yes, it is. Take out the 2 lots with a stop of 160 or 150, 150, 300, and the last one you can target the previous lows, of course, and if you reach these areas you can get out, or you just wait for a reversal signal maybe coming from the higher time frames. Okay, most important, you create this win-win scenario first. Again, the price touches the 200 here, it's retracing, but here it's creating after this short with 140 pips. Stop price goes down 200 pips and then it starts retracing. What happens here? If you've done your top-down approach, you will figure out that trading this is maybe not the best choice, but right now I'm just trying to cover the bounces. Okay, so if you think it's good enough, and you could target, for instance, this low, if it's covering target 1 and 2, you can try it out. If not, or even if it goes against you after hitting target 1, you just have to manage the trade, and that means you might get stopped out and then you take a small loss and you look for the next setup, or you switch to the lower time frames and look for reversal signal to get out of your bounce trade. Right now the bounces are important. What happens here? The price moves up, it's hitting the 633, also kind of a double top, right? And then you get your red candle, a stop over here. But what about the targets? Now you have support, you have 1, 2, 3, you have a touch here, and you can extend the line and you will come up with support in this area, and also the 200 EMA. So if you take a short here with a stop of 180 pips, now you have a target of 130. Would that be great to take this trade on the daily chart? Okay. No, it wouldn't. Because you don't have enough. The target is not big enough. Aggressively, if you are an aggressive trader and you say, I don't mind 180, I take 150, it's okay for me. Okay, lower the risk and then aggressively take everything out there. Yes, but if you want to be more conservative, what you do, you switch to the lower time frame. Look if there's any sign. Let me try to do that here. If there's any sign, a lower high, there we go. Here's your lower high, the green candle, and the big entry candle on the 4-hourly chart. Probably too big. It's still 100 pips stop. Now the target is about 100. It's still not great. Maybe still aggressive, with other words. Switch to 1 hour. Switch to the 1-hourly chart. Let me see if I can do that here and try it out there. So the 4-hourly didn't work. Maybe we get something after that on the 1-hourly chart. It looks good with a retracement to here. There we are. It's a very difficult to spot setup. Red candle, 2 to 3 line break. And now you have a stop of about 80. It's still more or less. So it not even the lower time frames agree much with this bounce trade. Okay, and if it's not looking good, and if you are a more conservative trader, you just stay away. Okay, and if you can't stay away because it just looks good, the bounce on the 633 and double tops and everything, then you have to target less. And if it's breaking, great, but if it's bouncing, you have to manage your trade. Okay, and what happens here? The price actually created a 1, 2, 3 and then bounced on the 200 again with the main daily trend direction, and this one looks good because now you have a 1, 2, 3, you have support from here, you have the 200 EMA, The problem is you're still squeezed between the 200 and the 633, but everything else looks good. And if you like that, and you also like 1 to 3 trading, then this will not bother you from trying it out, because now your targets are not the highs anymore. This is already a higher point compared to this and this. Okay, you would target the next resistance levels. But again, I'm getting too far already, it's confusing. Just focus on the bounces, the 200 EMA and 633. Okay, Jeff is warning me. He said, hey, it's almost 4.5 hours. And I think we covered most of it. The basics, the entries, targets, the top-down approach, and how to trade the bounces. Okay, now we can get in more detail when it comes to EMA 200 and 633, because we can also go to the lower time frames and look for bounces there. But at least the basics for you. We covered everything else trading in the range in much detail already, so I think you have a lot to remember. I will do tomorrow, I will do the weekly analysis, and I will upload the video, and then you will see what I have on my watch list and what you could look at to trade. Let's not do it right now, okay? We will have more webinars soon. We are already thinking about doing a longer webinar with Jeff together, like maybe 1-2 week trading live bounce trades, and my style and Jeff's style combined. We will also go into much detail on different topics, not only bounce trading, but everything else we do. And yeah, let us think about how exactly we are going to do that. Actually, we planned that Jeff would also start today and share his own technique here, but we figured that it's too much for one day, so we do it another day with Jeff, right, Jeff? And yeah, it's too much even for me. I can't think anymore. We will update you with new emails, and what I would like to ask from you, if it's not too much, if you like what we did or what we did here right now today, and you want us to continue also in future, it would be great if you write a few words about today, about what you think about the session, about the way we trade, and just your opinion, okay? And we could use it for our website to show others what you think. It would be great as a little, let's say, thank you for what we did. Okay, so do we have any other questions? Do you want to ask something? Okay, great, thanks a lot. Okay, perfect. That is great. So if you like that, of course, we're going to do that again. Perfect, great. So just a few words, if what you did, if you liked it, as you do it right now, just write a few words, not right now, but send us an email. You will find it under contacts on our website. You will find it on the Spartan Trade FX site, and also on nickandjeff.com. Just give a few words. As I said, do it right now if you have 2-3 minutes, or tomorrow, because after that you will forget about it probably, and and we would need that in order to help others as well in future. Okay, thank you, Bruno. Perfect. Okay, that is great feedback. I don't know, Jeff, do you want to say anything? Should I, let me see if I can give Jeff audio here. Maybe some comments. Want to add something? Where is Jeff? 150 people here and I try to find Jeff. Just give me a second. Maybe Jeff wants to add something to what we did here. Jeff, there we go. Hey Jeff, what I don't know if do you have a microphone right now? I will give you the audio or the presentation, the presenter settings here, whatever. Let me try, okay, Jeff? You should be able to talk now. Okay, sorry. That's okay. Then we do it next time. Perfect. So yeah, as I said, thanks for joining. It was really great to have you all here. It was also fun for me a lot, and probably also for you, hopefully. And yes, okay, Jeff. No worries. And we see you next time, okay? Have fun. I wish you a lot of success. And also enjoy trading. Don't forget to enjoy it. It has to be fun. Great. Have a great night, and we catch up with you very, very soon. That's great. George, yeah, everybody. Oh, great. Nice.